mortgage rates in San Antonio, Texas, where are they now, where are they likely headed, and what's with that quarter point federal funds rate cut that we saw? Is it going to impact you? How is it going to impact you? What gives? I'm Krishna Perkins. I'm a real estate broker here in San Antonio, Texas, and have been bringing buyers and sellers together since 2007. Today, we're going to unpack that mortgage rate cut, show you what exactly it is doing with your mortgage payment, and also I'm going to point out a few real estate markets inside of Texas and outside of Texas you want to pay attention to when all the distractions start settling down. Tariffs, jobs, things like that. Stick around. All right, folks, what we're looking at here is a quick little presentation on purchasing power, buyers' purchasing power, and this is all broken down by the quarter point. No, the federal funds rate does not directly impact your mortgage loans, but over time it can. If we have enough cuts and different policies are implemented, you can see a reduction in interest rates from the federal funds rate. But here we're going to focus now on San Antonio. So San Antonio's typical home is selling for about $295,000 right now, and right now we are hovering somewhere in between 6.25 and 6% interest rates, which is actually a little ahead of schedule from a lot of the mortgage rate predictions that I previously published in the San Antonio Housing Market Report. You can subscribe to that if you haven't already. I published that on or about the 10th of each month. But as you can see here, anyone in the middle, if you're a homeowner or a buyer and you have a house that you're selling or looking at buying that is in that median range of about 1,800 to 1,900 square feet, that's going to be about a $295,000 home. These are the homes that are selling. About $295 is where the majority of homes are selling in San Antonio. The majority of the inventory, the median price inventory, is about $305 right now. So you can get an estimate there. But as we move up and down this column here at 290 and 295, you'll notice that it's about $50 difference. So if we went from 6.5 down to 6.25, it's about a $50 difference that you're saving there with that quarter point. This is why my loan officer I talked to yesterday, he was so upset. He really wanted to see a bigger rate cut. He wanted to see that translated into maybe a half a percentage drop, and that would have took us down to like a 6% rate. So that's about a savings of $100. $100 a month is a good size savings for really just about anybody, but at the median price range, a lot of happy people would have been there. And these interest rates really do impact our budgets, and they really make it difficult to purchase a home, sell a home. So it's very important. A lot of experts are really eyeing this 5.75% interest rate here. And if you're a buyer and or a seller, this is something that a lot of people are shooting for, because it puts millions of Americans in the money to afford a home, even at today's prices. Yes, a lot of folks want to see lower prices, and I see that out there quite a bit. I don't know what exactly it's going to take to see that happen. A lot of people say, I want a housing market crash. Don't know that that's going to happen. We just still have such a shortage of homes, and I acknowledge there's a lot of homes on the market, but we have a lot more people that are just married to the rate that they have in the home, those 2.5%, 3.5% rates, and they have tons of equity, if not already paid off. So that's what's really different in this market versus the previous market, the Great Financial Crisis. We just had people in the home just not even qualified, but everyone, the majority of people are just so qualified. They have so much wiggle room that the best medicine here is to get these interest rates down into the fives to bring more people into the market. With that being said, we want to look here at this article just to give you another perspective. Mortgage refinance demand spikes nearly 60% as interest rates drop sharply. This is from CNBC. This was the morning before the interest rate cuts. This goes to show you right here, $806,500. So these folks were highly motivated to refinance their home. If we use that chart that we just used, these folks that had a price tag of 806, they're saving about $150 a month on their mortgage payments. They went from a 6.49 down to about a 6.39 in some cases, if not a full quarter point. So the point is, there are other people in the market to think about besides the local folks in the market. So which brings me to my next point here. If you're a first-time home buyer in San Antonio, or you own a home already in San Antonio, and you're thinking about making a lateral move within San Antonio, now might be a pretty opportune time to do so. Just take a look at a few different markets, a few out-of-state markets, and some in-state markets. Number one, Los Angeles, Long Beach, California, Anaheim, San Diego, California, Chicago, Denver, and in-state here, Austin, Dallas. Look at some of these markets and where they're at. Look at some of the homes in these markets that mirror the home that you're moving into or looking to move into. Okay, especially if you're a first-time buyer, look at some of the homes that match what you're looking for here, and you'll notice the prices are much higher. Even though we have a pretty high tax rate, for instance, our tax rate's probably 4 times higher than some of the homes that you're going to find out there in California. But even with that said, the price tag out there is so much higher. You're still going to be looking at about half the mortgage payment that you'd pay out there in California. That is the big reason people are still looking at Texas, still looking at San Antonio. Not as in big a numbers as they were before, but it's still a place to look at buying because of the prices, where it's just our median price is so much lower than it is out there. Okay, I was looking in California, LA there, and my goodness, I mean, a $295,000 house here is going to be at the bottom $850, if not 1.2. Keep that in mind as you're trying to decide what the timing looks like for yourself. If you're not ready, obviously don't buy a house right now. It is going to be more expensive than it has been in the past. I know a lot of people are wishing, hoping that there is some sort of correction that is going to cut prices in half or something like that. But when you're considering where the prices are here right now, where the prices are in other areas, I just don't see it happen. I don't see those folks in those areas letting it get away so far as to let the prices go in half. So if you're ready, willing, and able to make a purchase, and you want to make a purchase, by all means, now might be a good time to think about doing it. You can reach me at 210-260-6617. If you're considering selling your home and you want a no obligation home valuation of your property, you can reach me at www.homevaluetx.com. See you guys in the next video.